Market Monitor this week is Mr. Robert Prechter, the editor of the Elliott Wave Theorist, based in Gainesville, Georgia. Welcome back to the Nightly Business Report, Bob.
Thanks, Paul. It's good to be here.
Now, as well known as you are, because your philosophy on the market has been quite true over the last several years, there might be a few viewers that are watching that aren't familiar with your philosophy. Could you just give us a quick rundown on what it is?
Sure. Well, in the last 10 years, I've looked at about 40 or 50 different approaches to market forecasting. I've thrown most of them out. The one that I think is the most reliable is called the Elliott Wave principle, and that's what I base most of my forecasts upon. The wave principle is basically a detailed description of how markets behave. It takes a close look at price patterns, how markets have acted in the past, volume patterns, and so forth. It ignores things like the economics of the day or the political announcements of the day and so forth. What I try to get at is how people think and how they change from deep pessimism to extreme optimism and back again in the normal market cycle.
So you're highly the typical market technician or fundamentalist.
Well, I don't think I'd want to be, really.
Very good. Well, Bob, the last time you were with us was September 14th of last year, and you told us at that time that according to your wave pattern, we were going to go much higher. The Dow Industrial Average on September 14th last year stood at 1237. Today, we stand at 1338, 101 points higher and a new record high for the Dow. Does all that big move make you a little less enthusiastic on the bullish side?
Okay, well, that's a good way to put that question, because usually the higher the market goes, the less bullish I want to be, and the closer I try to attune my indicators to decide whether it's a top or not. But I'll tell you, with the amount of skepticism that's out there, with the wave structures that are being created in the market patterns ever since last summer when the Dow was at 1100, continuing through today, if anything, I'm just about as bullish as I was 100 points ago, because I think the potential is so great. And in fact, this summer, I think could turn out to be quite explosive with quite a few points covered. So I'm in the frame of mind where I want to keep all of the long positions that we bought last summer at 1100. I don't think this is a top, and I think there's quite a bit more to go.
Well, but nevertheless, Bob, one of the things you don't do is recommend specific issues. This must be a bit frustrating for someone that knows you're right, but they don't know what specifically to buy. How do you resolve that?
All right. You know, this is a particularly good market to ask that question, because if you've noticed, all of the people that have tried to outsmart the averages by picking stocks have had a heck of a time. Now, some people who are good at it may do better than the averages, but the average investor has been, say, in technology stocks, which have been killed ever since February through June of 1983 when they topped out. That's been 2 years now. Other groups, some have done extremely well. You watch the transports or the airlines are up 50–60% from last summer.
Right.
There is a real mixture going on and a lot of cross currents. So what I've been telling people is this is a pretty treacherous market in terms of choosing stocks. So the best way to approach it is to involve your money in a mutual fund that is broad-based or blue-chip oriented, not one of the specialty funds. Or if you're a trader, you can trade the index futures or the index options.
Okay.
But that way, if you're right on the market trend, like we've been for the last year, you're going to make money.
Okay, so stay with a broadly based mutual fund.
I think that's a good way for most investors.
Plenty of those to choose from. Okay, now one quick word about gold and silver. We just have about a half a minute here. Last time you were very bearish on gold, said it could break 200. Well, it didn't, but it did go down. Any hope of buying now for a turnaround?
No, the bear market as I see it is still in progress. I still think gold is going to break 200. There's been an intermediate term rally which started in mid-March. The price is relatively held up, but long term, and I think starting around August, you're going to see gold resume its downtrend pretty dramatically.
All right, Bob, thanks very much for being with us.
Okay, look forward to next time.
Still a very bullish Bob Prechter, my market monitor this week.